Good morning. My name is Frank Grinnell. I've been advising professional money managers and investing in the stock market for over 20 years. It serves as my day job, but most importantly, it is my absolute passion. On Street Views, I offer my daily viewpoint on the stock market in under 7 minutes. I will cover things like the global macroeconomic picture, the mood of the market, company-specific news, secular trends with some actionable sector and stock calls. I hope my insights are useful to you, whether you are a professional money manager or a passionate investor. At Grinnell Capital, we actively manage dynamic stock and ETF models for financial professionals and their clients, as well as individual investors. If you want to learn more about what we do, send me a note, frank@grinnellcapital.com. You can also find more of my insights on Twitter @GrinnellFrank. And now, today's Street Views. Good morning out there. Welcome to Friday, September 2nd, 2022. We've got futures are up a bit. I started writing this post for this podcast before the employment number came out, and futures were just dead flat. People waiting to see what comes out of the job report. So we got a number 315,000 for August. I think that was essentially in line with consensus. Definitely not cool enough to make 50 bips a reality for the end of the month, nor is it especially hot enough to make 75 bips an eventuality either. So kind of in the middle. Probably why we got a reflexive bounce in the futures. Dow futures got as high as up 200. They have pulled back a little bit, now up like 75 as I sit here right now. So also looking around, we've got oil futures up more than 2%. Nat gas pulling back a little bit on news that Russia's going to restart Nord Stream 1 pipeline to Europe for natural gas supply on Saturday. I mean, they'll probably be 20% of capacity, something like that. Knowing those guys. And sad gold up a little bit this morning as well, as we get a little bit of a pullback in the dollar. So we've been calling for a little bit of a reflexive bounce. I think we're going to get that today. Everything's lining up on it technically. For us, we're going to use it as a chance to probably get along a little more vol on this before next week. There is also an opportunity if you happen to be long some high beta cyclical sort of names that are giving you stress and causing you less sleep than you wanted to. It's a chance to lighten up on some of those as well. Just taking a look at yesterday's action, was no bid for technology out there. It was crazy. Obviously, you had the chip concerns out of the Biden administration weighing on chip sales into data center. So that was a big hit. And then Okta, what have you. Okta, speaking of Okta, but the point on the technology stocks, I saw stocks down 5 to 10% just on no news. Just people just saying, get me out. This is going to be next. It's just going lower, so I went out. So that's probably somewhat a good sign in terms of pretty terrible sentiment and washing that out. But the Okta CEO, he echoed some of Mark Benioff's comments that were made last month, just in terms of spending decisions seem more measured at the enterprise level, longer sales cycles, more, you got more folks have to sign off on big capital spending decisions, things of that nature. I think you're going to continue to hear that narrative and increasing more so as we move through September into October. I think everyone's kind of in a wait and see how bad are things really going to get kind of thing right now, and I think that's going to include the enterprise for sure. Use today wisely. Have a fantastic weekend, and we will talk to you on Tuesday. Have a good one. Thank you.
And now for some important disclosures. Grinnell Capital is a state-registered investment advisor. Services offered by Grinnell Capital can only be offered in certain states where Grinnell Capital is registered or meets required exemptions. Registration does not imply a certain level of skill or training. For additional information about Grinnell Capital, including its services and fees, please review the firm's disclosure statement as set forth on Form ADV and available at no charge at advisorinfo.sec.gov. This podcast is provided for informational purposes only. The information contained herein should not be construed at the provision of personalized advice and is subject to change without notice. This material should not be considered as a solicitation to buy or sell any asset or engage in a particular investment strategy. Investing in securities involves the risk of loss, including loss of principal invested, and may not be suitable for all investors. Past performance is no guarantee of future results. This podcast contains certain forward-looking statements which indicate future possibilities. Actual results may differ materially from the expectations portrayed in such forward-looking statements. As such, there is no guarantee that any views and opinions expressed will come to pass. All expressions of opinion reflect the judgment of Grinnell Capital as of the date of publication and are subject to change without prior notice. This podcast contains information derived from third-party sources. Although we believe these sources to be reliable, we make no representations as to the accuracy of any information prepared by any unaffiliated third party incorporated herein and take no responsibility therefor. This podcast is provided with the understanding that Grinnell Capital is not engaging in rendering legal, accounting, or tax services, and we recommend that you seek out the services of professionals in these aforementioned areas. The principal investment focus of the accelerator model, the strategy, is to achieve strong relative and risk-adjusted returns, primarily by investing and trading in securities issued by companies that focus on the global information, technology, consumer, healthcare, industrial, and infrastructure sectors. These sectors are characterized by robust secular growth, an abundance of both new and maturing product cycles, a high degree of competition that creates the potential for relative winners and losers within a subsector or theme, a high degree of revenues and earnings volatility, rapidly changing sentiment and public perception, significant yet unrealized potential for globalization, and superior relative liquidity. Investment in the strategy is speculative and involves a high degree of risk. The second investment model is called the ignition model. The ignition model is an all-exchange-traded fund, ETF, strategy with investment objectives similar to the accelerator model. This model seeks to capitalize on long-term growth trends experienced by the market leaders in various areas and sectors. The ignition model will also seek ETF investments based on cyclical forces experienced in the U.S. and the global economy. This model is also designed to have the ability to offer some downside protection in the event of significant market stress through investments in ETFs designed to take advantage of market volatility. The strategy's performance can be volatile. Grinnell Capital has total trading authority over the strategy. The use of a single manager applying similar trading programs can mean a lack of diversification and consequently higher risk. For more important disclaimers, please visit our website, grinnellcapital.com.